Next up, we have Strike Energy, ASX code STX, market cap of $520 million. The company aspires to be the lowest cost onshore gas producer and a globally competitive fertiliser manufacturer in Australia with net zero carbon emissions by 2030. We have with us Stuart Nicholls, who is both the CEO and Managing Director. Stuart, thanks for your time. Welcome back. Over to you.
Thanks, Tim. Cheers. We've got quite a bit to go through today, so I'm going to go at a fair old clip. So we can jump straight through to the third slide past the important notice. That would be great. So as Tim quite rightly said, Strike Energy, ASX 300 listed integrated energy, gas and fertiliser developer. The company, as we move to the next slide, will show you that we have some 3,000 square kilometres of prime gas-prone acreage, where we have some 4 gas fields throughout our portfolio. We've had a successful run of 7 consecutive exploration and appraisal wells. So Strike is running at 100% success rate in its upstream delivery. We've got material reserves booked across multiple gas fields, which are developing domestic gas sources to go into the WA domestic industrial market, with cash flows impending towards the end of this year. And finally, a large amount of success in Strike's 100% drilling at the South Galla gas field, which provides the vertically integrated gas feedstock required for Strike's 1.4 million tonne urea fertiliser development. So as we continue to progress to the next slide, please, I'll just quickly talk about the WA gas markets. WA gas market is not immune to the existing situations that are going on around gas markets throughout the world. We have seen, as a result of sort of 2 downturns in the last decade, a significant amount of underinvestment in new reserves coming online in Western Australia. The WA gas market is some 1,200 terajoules a day of gas consumption, which is almost equal to the entire of the East Coast gas market. It's a market that has got sort of multiple ammonia plants, large miners, large alumina refineries, as well as nickel refineries all throughout the state. Unfortunately, that underinvestment in new gas reserves has also been met by write-downs across multiple LNG projects, as well as domestic gas-only fields. This has resulted in the AEMO now forecasting a shortage in WA gas by the mid part of this decade, where some 54% of the WA gas market currently remains uncontracted. As a result, we're seeing spot prices rising close to some $6 a gigajoule, which is the highest that the spot price has been since the beginning of LNG investment in the state in 2013. And just moving ahead to the next picture, please. Strike's looking to arrest a bit of that shortage of supply with a very fast and low-cost development at its Walyering gas field, where it has recently announced its maiden reserve, some 54 petajoules of 2P reserves and up to 102 petajoules of recoverable gas across the resource categories. It will cost $14.2 million to bring the existing 2 wells online to complete those wells. That will be about $7.4 million Strike share as 55% an operator. And we will have a facility capable of producing 33 million standard cubic feet a day, which is equal to 37 TJs a day, given the very high quality of the Walyering gas and the negligible impurity in the gas stream. That will also be met with 1,400 barrels of condensate storage and offloading capacity, where we will be looking to produce between 200 to 400 barrels a day of high-value condensates that are superior to Brent pricing. It's sort of a condensate that sits between jet fuel and gasoline. And so this is a very low-cost development. You can see in this picture here to the right-hand side of the slide, where the APA Parmelia gas pipeline porpoises just past the gas field, and we've got an above-ground tie-in point for the Walyering development. So this will likely generate the company's first cash flows, and we're starting to look to interrogate a final investment decision in the coming weeks with our joint venture partner, Talon Energy. Moving ahead, please. But what does moving into production do for Strike? Well, as you can see, Strike on the ASX, we have a significant premium applied to producers. And so if we take the group of producers in the country, so Cooper, Beach, Santos and Woodside, they trade at a almost 200% premium for their reserves and resources versus the developer and explorer categories, which would include, sort of in this list, we've got Strike, Empire, Carnarvon, Comet Ridge, Tamboran and Warrego. And so bringing Walyering online, whilst that might only represent a small portion of the company's overall reserve and resource position, may actually have a significant compounding effect of the valuation of all of Strike's resources, And that is because we are demonstrating the ability to not only be a successful explorer and appraiser, but also developer and ultimately producer. Next slide, please. Our domestic gas business then moves into the growth phase, where we're looking to take a development decision at the West Erregulla gas field towards the end of the year. The reserves position of West Erregulla has recently been successfully supported by the successful appraisal at the West Erregulla 3 well, where we delivered 38 metres of very high quality net pay. That's likely to have a positive impact across the reserve position of the field, and we're currently having our reserves auditor look at the existing 2P reserve and potentially assess whether there is a larger number there. With West Erregulla coming online towards the late end part of 2024, with Walyering on top of that, Strike will actually be producing some 10 to 15% of the total West Australian domestic gas on a daily basis, where gas contracts are in place with Wesfarmers, AGL Perth Energy, Alcoa, and we're just partway through the contracting processes for the Walyering gas field. So moving ahead, but to the Strike's multi-billion-dollar upside opportunity, which is what we call Project Haber. It's our vertically integrated urea development at our South Erregulla field, which is an extension of the Greater Erregulla resources, where the development of this facility is a national imperative. As Justin was quite rightly putting, Australia is a major urea consumer in its own right, and that's because grain is the 4th or 5th largest export of the Australian economy. On an annualized basis, in only the last year, consumption of urea in Australia grew by almost 20%, and that was just off the back of good weather. This year, we have the highest grain pricing that we have seen for a very long period of time, and we've got good weather whilst the Australian growers try to fulfill the missing volumes of grain that won't be coming out of the Ukraine and Russia this year. So we are likely to see another double-digit growth in urea consumption in Australia. With the closing of the Gibson Island urea plant on the east coast of Australia, Australia will have no domestic supply of nitrogen-based fertiliser or of AdBlue, which is the diesel exhaust fluid to reduce the emissions of diesel engines. Enter Strike and Project Haber. So we're looking at developing a 1.4 million tonne facility, which will be tied directly into our own supply of natural gas. We'll be building that facility in the wheat belt of Western Australia, where not only can we, on a normal year, attack 25% of the cost of a tonne of grain, but we can also start to chip away at the 54% carbon cost of grain, where Project Urea will be generating the lowest carbon urea on the planet, with a 60% CO2 reduction from the current existing urea suppliers coming into the country. Next slide, please. It's all the value of Project Haber and Strike's ability to deliver a mega project, some $3.5 billion mega project, all comes off the back of world-class low-cost natural gas. Strike's lifting costs of gas from South Erregulla into its plant will be some 35 cents a gigajoule, which puts Strike in a position to deliver world-class priced urea. We've got multiple gas discoveries that will be linked directly into the fertiliser plant, as well as a carbon capture and sequestration reservoir. And you can see in the bottom chart here, somewhere between 300 and 600 PJs of gas will deliver up to 20 years of urea production. The discovery well at South Erregulla, we've tested one of the 2 horizons so far, the Kingia sandstone horizon, which successfully flowed at a maximum of 80 million standard cubic feet a day. That's in excess of the amount of gas that this plant would consume on a daily basis from that one horizon. And we have a second flow test from the Wodgina sandstones, which will occur in August. So it's an exciting thing to look forward to. Moving ahead. But as you can see, here's some new information on Project Haber. We've got the FOB build-up cash cost of Project Haber at $78 a tonne FOB Geraldton. Now that is world-class and this matches the existing cost of supply of Russia, which is the lowest cost producer of urea on the planet. But we'll be building that facility right here, where some 40% of our production will leave from plant and go straight to farm on a single truck. So there's a lot of the logistics costs that won't be realised for a large proportion of the distribution of our urea for the volumes that will go into WA. But the reason why we are able to deliver such a low-cost urea product, and that is because, as I said, we are vertically integrating are gas supplied straight into the plant, straight from reservoir wellhead into the plant. We're designing the plant to consume the reservoir's specified gas consumption. And you can see that by having an incredibly low energy cost, we can offset the more expensive capital and lower productivity costs that we suffer from major projects here in Australia. And that's how we end up with a world-class opportunity. Moving ahead, please. Validation of the project, is not only the discovery of the gas resources that underpin the development here, but this project is now a major project in the eyes of the federal government and in the state government of Western Australia. So much to the point that the state government of Western Australia has awarded $332 million to the Port of Geraldton to upgrade some facilities for Project Haber, and as well as create additional trucking and offloading opportunities for Project Haber's urea. We have recently acquired additional farming land in Western Australia to co-locate the plant directly on top of the gas field, which will remove some $100 million of capital, as well as allow us to successfully navigate an accelerated environmental approvals pathway. And then lastly is Coke was announced as the successful bidder of our 1.5 year long offtake project process. That's up to 15 years. That's one signed into a binding form of arrangement. That is some of $30 billion offtake arrangement with the 6th largest private company on the planet, Koch Industries. So let's keep going ahead. The plant itself, as I said, offtake is secured through Koch Industries. They market and distribute some 10 million tonnes of urea products around the world as it stands. We're using the best-in-class technology. We're using autothermal reacting from Halder Topsoe, as well as their ammonia synthesis units, Sapim's urea unit, and ThyssenKrupp's granulation units. We've had Technip Energies, the large French engineering company, conduct all of our pre-feed work, and we should be in a position to announce the successful feed and EPC contractor in the coming weeks, which is a really exciting development for this project. But as I said, large amounts of support from the state and federal government, as well as the Midwest Port Authority. Jumping ahead. By purchasing the farm, we're able to integrate some 140 megawatts of world-class renewable energy into Project Haber and reduce the ultimate carbon emissions of the plant down to a minimal 300,000 tonnes for the 1.4 million tonnes of urea. And when we add all that together, if we jump to the next picture, please, you can see these wind resources sit in the top 9 performing wind farms in the country, and these are some of the highest performing wind farms in the world. The Midwest is rich in its wind resource, and that all brings together on top of, I'll just jump 2 slides ahead, to Project Haber generating the lowest carbon urea in the world. And that's because, well, for one, generally people with large gas resources at the moment are developing LNG infrastructure, and so the application of new ammonia technology into urea manufacturing and production is yet to really take hold. So Project Haber will set a new global standard in terms of the carbon intensity of nitrogen-based fertiliser, and that's a really amazing both carbon and economic benefit that Haber will deliver to Australia, where we're estimated to generate some $8.4 billion of GDP and some 300 to 400 full-time jobs in regional Midwest of Western Australia. Last couple of pictures that we'll talk about, as I've discussed before now, is the next picture is of, the next slide, guys. Koch fertilizers, as I said, likely to deliver most of this fertilizer into the domestic economy and into Australian farms. Koch is looking at building out their existing Australian business through the acquisition of this fertilizer. And then to the next piece, please. We'll be accessing the east coast of Australia through the Geraldton port, and you can see work done by GHD here that shows that our shipping costs from the Geraldton port to the major east coast ports, where we would be bringing the urea in, as being far superior, even with the cabotage issues that usually associated with coastal shipping. And that's because trade flows in Australia are 2 to 1 east to west. And last and not least, it wouldn't be a strike presentation without pointing to the exciting upside. But next slide, please. The development of Project Haber allows us to apply for an exemption to the LNG export ban for onshore gas in Western Australia. We are continuing to work with the state government about how the delivery of Project Haber is in line with the state government's directions and guidelines in how to successfully navigate that export license. And, should we be able to reach the LNG markets through the Northwest Shelf capacity, which still requires some 1,000 terajoules a day of feedstock by 2030, I feel that there's a considerable amount of value upside at Strike, which is yet to be realised. And so Strike is not only an exciting juncture as it makes its way through to production. We'll just jump to the final picture here. But, we are continuing to develop and show the market that we are capable of bringing the multi-billion-dollar Project Haber through to its investment decision, which would occur towards the end of next year. We are surrounded by a board of high caliber and high quality individuals that have navigated mega projects in Western Australia before. And I think that Strike's track record is being shown to be a good indicator of future and forward performance. That's all from me. Thanks, Tim.
Thanks, Stuart. Got time for a couple of quick questions. Now gas prices are at all-time high. Will the benefit ever be to sell gas directly into the market rather than through your urea production? Well, where are the margins?
Yeah, so WA's domestic gas pricing is sort of in a it's in a captured market that's affected by the domestic market obligations of the LNG exporters. And so as a result, you've got gas pricing, let's call it $7 on a take or pay basis, Australian, in WA at the moment. However, gas that we put through Project Haber would be realizing 10, 11, 12 US dollars a gigajoule. So at this point in time, the value added nature of putting our gas through our own fertiliser plant has a superior economic return to Strike shareholders.
Sounds right. Now, in terms of timing to cash flow, you touched on that, going from the developer to the producer.
Yeah, so the FID for the Walyering gas field is in the very near term. We would see that the Strike's still on track to be able to put commissioning gas through the facility at the end of this calendar year, which would then see Strike enter into first gas sales on a take or pay basis at the beginning of calendar year 23, which is a really exciting juncture, sort of 5 years running an L, pretty excited to run a P&L.
It's not that far away either, given how time moves so quickly. Now, there's a technical question here. When does Strike expect EPA approvals for the West Erregulla Galla gas project?
Yeah, so they're going through their processes at the moment. We expect that internal EPA approval will be delivered towards the end of quarter three this calendar year. Very likely, as with any fossil fuels related development in Australia at the moment, it will come under a series of conjecture and appeals that will then likely have to go through a ministerial appeal process. And we expect that the minister should be in a position to sign off on the development towards the end of the calendar year, which would then be when we can contemplate an FID for West Erregulla.
Thanks, Stuart. That's all we have time for. There's a couple more questions online if you don't mind answering those, but have a nice weekend.
Thanks, Tim. Thanks, everybody at Share Cafe.
Thank you.